it is happening now.
Cross-border payments have come a long way, but friction still exists, especially for SMEs. So how can tokenized settlement networks reduce friction for SMEs compared to traditional correspondent banking?
We're a technology-driven bank, and we service fintechs and banks globally, and they in turn service SMEs. Now, SMEs are working cross-border. It's no longer about running a domestic business. Many are running global businesses. So it's important that they receive funds as quickly as possible to better improve their working capital. Now, if you're running transactions through traditional rails, it can be quite slow. It can, running through correspondent banks, it's not instant, it's not 24/7, and it can be quite costly as well. So we believe that there is a place in the future for tokenized solutions, whether it's deposits or stablecoins, to help bring settlement from a cross-border perspective, real-time and instant. And that is what we are building now, and that's where we see the future go. Clients will have options whether they want to move through traditional rails or whether they want to move through tokenized rails, which we would expect to be instant in real time.
What regulatory clarity is most needed before tokenized cross-border payments can really scale? And which jurisdictions are getting it right so far?
We are heavily regulated. We are a bank. We are regulated by tier one regulators, whether it's the CSSF in Luxembourg, the UK, Australia, and most recently here in Singapore as well. So we are heavily regulated. But a large part of what we do is within the traditional finance space. So it's fiat payments. What we would expect as the market evolves is digital payments will have the same level of oversight as we see in the traditional world. And we are ready for that. We are prepared for that. The challenge we have at the moment, which I think the most of the industry has, is it's quite fragmented. Singapore is at the forefront of regulation, and we're seeing that with other markets as well. But we really need more of a standardized approach to allow this to operate seamlessly when it comes to digital money.
So there's growing interest in stable coins as a settlement layer. Could stablecoin-based settlement improve liquidity management for regional banks without destabilizing FX markets?
So this is a concern I think a lot of banks have, and it's obviously it's still an evolving space. But generally, we believe that stablecoins will improve liquidity. A lot of banks, they will currently have trapped capital, which they need to have in order to service their payouts. Stablecoins should bring payments real-time need and a more instant operating model, which should improve liquidity to allow banks to operate better. When it comes to FX, the FX markets have been running for 70 years plus. So it's too early to tell if this will have any sort of negative impact, which we don't believe will be the case. There will be opportunities for organizations like us to be involved in potentially a new way in which FX is managed. And that could mean FX on-chain solutions, which we will build. And if that's where the market is and that's where our clients want us to focus on, then we will, of course, look to build those solutions.
What are the guardrails that are needed to make all this work safely?
I was asked the very same question at a panel yesterday. And I think we all collectively agreed that trust is going to play a key part in the adoption of stablecoins and digital money. But that comes with compliance, that comes with regulations, and that comes with adoption. And that's where we will focus on and hope to see further clarity as this market continues to evolve. That said, as long as we can ensure that there is clear settlement, finality on settlement, funds are accessible, the goods can then be dispatched, that level of trust will be key as this market continues to evolve.
In the next decade of finance, what's the one foundational capability or infrastructure shift that needs to happen now? And what's at stake if we don't get it right?
So it is happening now. We are currently banking 700 financial institutions. We are moving around $1.3 trillion of volume. Every single one of our clients is speaking to us about stablecoins. It's speaking to us about tokenized deposits. How can we use this new technology to better improve cross-border payments? So it's not a case of if or when. The message to the market that we're seeing collectively is now is the time to utilize this infrastructure.